Portfolio Builder members, here's a quick video to teach you how to follow today's trade alert. And remember, if you have any questions or just want to chat, we have a live webinar right after our trade alert, about an hour after, every day with our entire community. So please join us. Don't be shy. Ask some questions. We have two trade alerts today. One is for our rich man income system, where you have to have enough capital to purchase 100 shares of the SPY ETF, which represents the S&P 500, or you need to have enough capital to buy 100 shares of the TBT ETF, which is a very niche ETF that's designed to generate a consistent retirement income. So let's jump into it. This is the Word doc that gets turned into HTML and sent out to you guys. The first part of this just emphasizes how much money you can make simply renting out the SPY ETF to speculators. And so the key to this is that our underlying asset, the S&P 500, is a very safe long-term bet for retirement. That this is somewhere you can park your cash and then sell covered calls against this position Monday, Wednesday, Friday for retirement income. And so not every trade alert will have a 35 basis point return. Like today's is a little bit less. And that's because we're playing it safe with the trade alert that has a 72% chance of bringing in about a 25 basis point return over the weekend. But you can see this really adds up. If we don't even count the underlying asset appreciating in value, we can walk away with around a 50% annualized return, even if you spend all of the income. Now cut that in half. Let's say it's only 25% because we're playing it safe half the time, like we are today. Well, even then, this strategy takes a lot of the guesswork out of how you're going to generate retirement income, and it's something you can do the rest of your life. This is also the only ETF in the world, at least right now, that offers enough option liquidity to do this 3 times a week. Many option contracts are very illiquid and they only have weekly or monthly options. So you can see the SPY ETF has been flying all around, and this is great for our strategy. The more it whipsaws up and down, the higher the volatility level gets and the more expensive it becomes for speculators to try to buy these call options from us. So the more whipsawing, the better for selling covered calls. Now, on our trade alert from Wednesday, we only made about $22 a contract if we were assigned. And if you weren't assigned, it's okay, we'll cover it, and you most likely are ballpark in the exact same profit range. And the plan today is to do another defensive trade. However, it's not as defensive as Wednesday's, and that's because the Fed came out yesterday and basically said that they're going to continue the free money party for all of 2019. So stocks rallied on that. The people we sold our call option to made a really nice return. And now I bet they're feeling like they're going to do it again. So today we're taking in an even bigger profit and letting them bet away. So this is $66 per contract that you can collect over the weekend. And then we'll do it again on Monday and again on Wednesday and again on Friday. So let's take a look. The first step is to make sure you have your 100 shares of the SPY ETF. And if you want to track it like I do, you do have your own unique spreadsheet. So you can see my spreadsheet here, currently sitting on a very healthy return since we launched this. We launched this during the Christmas massacre. So while people were losing a lot of money, we were writing covered calls and actually making money. So this program is designed not to outperform anyone, but really to just make consistent returns against a stable underlying asset, which is the SPY ETF. The next step is to cover yesterday's position, or rather Wednesday's position. So if you were not assigned for whatever reason, then you are holding on to the gain in the SPY and need to buy back your covered call. So you'll end up netting the exact same as everyone else, and the next step for you will be to follow the covered call. So what's important here is we're about 4 strike prices below the current trading price. So the trade alert for today is to sell to open. For our portfolio, we're working with 1,700 shares of the SPY ETF, expiring March 25th, 2019 at the 280.50 call option. And again, what I like is that this is 4 strikes below the trading price, which gives us around a 72% chance of winning based on the delta. So I'm not going to get into the details of that, but if the market goes down to 280.50, we win. If the market goes flat or trades anywhere above that, we win. The only way we supposedly lose is if the SPY were to tank below 280.50 by Monday. And even if that did happen, then we get to keep the entire option premium and just write another one. So in our mind, really, it's not a big deal because we're just going to keep writing these covered calls, and we expect the S&P 500 to appreciate over time. Scrolling down, we now have the updated track record. This is before I put on today's trade alert. And so this track record screenshot will always be the day before and updated the next day. Moving on to the TBT trade, our underlying asset has dropped by $2 in the past few weeks. And this is because the central banks are very fearful of a recession looming. In fact, all the big central banks have been becoming more and more dovish, but they're already at 0% across the world, so this can't go much lower. And the good news is that this volatility index on treasuries had reached an all-time low, which was actually bad for our strategy. We want there to be volatility so that once again we can get a better premium on writing our covered call. And the yield has almost doubled since just a week ago because of this drop. And I expect this to flatline here and start raising back up as some of the big problems start to seep into the treasury market. So the trade alert today is to cover the 35 strike for a penny. So we made a 98% profit on that part of the trade. And then we're going to sell to open 10 March 29, 2019, 33.50 call options. Try to get around a 20-cent credit. That's the mid price right now. What's important, ignore that limit order right there. The mid price is what you can really get. And we're just writing the strike that's right above the trading price. So that means we're looking for the TBT to trade flat or slightly up. And we can make money both on the underlying asset with this trade plus the covered call income. This portfolio only trades on Fridays. So once you put this on, you're set to jet. And we'll do another trade on Friday for this program. And here's an update on that track record. It took a little bit of a hit. It was outperforming the rich man system, but not any longer, although I do expect it to quickly catch back up. The yield on this is now amped up, and it's probably at a pretty strong resistance level once we look at this. So if this treasury rate goes any lower, there will be no foreign demand, which means America will not be able to fund its deficits and sell its bonds. And so I highly suspect this will start to go right back up and be perfect for our strategy. Now, if you want to learn how to fill out the Portfolio Builder spreadsheet, up top is a tutorial link. That's a great place to learn that, but it's really easy. This is where we have our open option positions, and I'll be closing this out and moving it down here, and that's it. There's one ETF we trade in this basic level program, and it just gets created in the open option writing and then moved to the closed, and then you open a new position and move it to the closed. So it's that simple. Same thing on the TBT system. So you can see it's a very consistent way to generate retirement income on two very stable products, the S&P 500 and then the 20-year Treasury rate on the U.S. bond market. So thanks for your time. Look for a new trade alert on Monday, and if you have time, join us on our live webinar for Q&A and just chatting with our community. Thanks again.